This is the latest video in our series of looking at popular trading mistakes. Hello, I'm David Jones, and this is the latest video with Capital.com, where we look at some popular trading mistakes. In this video, we're going to take a look at what I think is another really common mistake, particularly in the beginning when you start trading and you may be full of overconfidence. And it's the problem of trading too big. So if your account size is X, whatever X is, just taking too much of a risk with that capital, so risking too much money. So to start right from the basics, let's look at the problem of trading too big. So what does it mean, and what sort of impact would it have on our account? And then after that, we'll look at what we can do to try and have a sensible approach to sizing our trades. So let's explore this idea of trading too big in a bit more detail. Most people take on too much risk when trading. They maybe get carried away or overconfident in the beginning. For example, let's say you have £1,000 account and place a trade with a stop loss at a point, which means if the trade goes against you, you'll end up losing £500 if you're wrong. This is an extreme example, but just to illustrate the dangers of trading too big. Your view on the market ends up being wrong and your trade gets stopped out. Your account is now worth £500. Don't forget, we started with £1,000. We've lost £500 on this trade, so we now only have £500 in our account. So you now need to achieve 100% return on the £500 left in the account just to get back to where you started from. So this is the risk of trading too big. So hopefully it's obvious when it's pointed out like that. You know, if you're trading too big and you have a series of losing trades, you can do enormous damage to your trading account. Plus, of course, your own individual psychology, because it will really affect your confidence and you may miss out on what would be otherwise good opportunities. So I think it's important when you start to take a step back and think about, well, how much do I have to trade with and how much should I risk losing on any one trade? And there are some tried and tested methods. There is a widely accepted level of risk that you should be taking. So again, let's take a look at these numbers and how it would break down on an individual's trading account. Let's take a look at sensible approaches to risk management. So most recommend trading at a level where a losing trade or even a series of losing trades is not going to have a material impact on your account. So this means trading at small size relative to the size of your account. Most sensible approaches to risk management recommend only risk losing 1 to 3% of your trading account on any one idea. For example, let's say you have £5,000 in your trading account. Applying this approach, any losing trade should only cost you £50 to £150 if it goes wrong. That's the 1 to 3% risk. So let's look at this in practice. Let's say you decide to buy the Dow and you want to set your stop loss 100 points away. You have £5,000 in your account. You only want to risk losing 2% of your account on any one trade. That's sensible risk management. So in this example, with a £5,000 account, 2% of that is £100. So if this trade goes wrong, it should only lose you £100. So with a 100-point stop loss, you need to trade at a size that's the equivalent of £1 for every 1 point move in the Dow. And we'll take a look at this on the trading app in a few seconds. So that's it in theory. Let's have a look though on the trading app, and now you'll see just how easy it is to come up with the appropriate size from a risk management point of view when you're trading. Let's set this trade up on the app so we can see how to practice sensible risk management. Next to quantity, I can tap to set my stop before I place the trade. Now I'm going to tap on stop loss to set my stop loss distance. you can see where it says price goes down by. I'm going to choose 100, so I'm going to type that in there. You can also see I haven't changed the quantity of the trade yet at the top. It's still at 0.1. With a 100-point stop loss, this is a risk of £7.56. So to risk £100, I need to increase my size. So I can tap up, or I can just tap directly in the box. I think I need to trade around 1.3 to give me a risk of £100 with a 100-point stop loss. So that's done. A risk of £98.27 in this example if I buy 1.3 of the US 30 with a 100-point stop. If I'm happy, I can tap to buy and open the position. I really can't overestimate how important this idea of position sizing and sensible risk management is. I think in the beginning, plenty of people ignore it and they spend all their time looking at things like Bollinger Bands. How many numbers should I have for my Bollinger Bands? How many days moving average should I be using? What setting should I have for my RSI? All this sort of stuff. And don't think about something as fundamental as position sizing, which can have a massive impact on your account. So hopefully this idea of trading small, so a series of losing trades, doesn't take you out of the game. Hopefully I've stressed the importance of that. We'll start wrapping things up there, but we'll deal with another common trading mistake in the next week or so. As usual, any questions or comments, leave us a message in the comments down below. Every Wednesday, I do a Facebook Live broadcast at 12:30 where we take a look at what's happening in the major markets, levels to look out for, possible areas for stop losses, that sort of thing. To follow that, the easiest way if you're on Facebook is go to the Capital.com website and like it so you get notified, and then the video is available later on if you miss the session. To never miss out on the videos that we upload during the week, make sure you're subscribed to the channel by clicking on the subscribe button, and if you click on the alarm bell notification, you get automatically notified every time we upload a new video. But for this session on common trading mistakes, we'll wrap it up there. So from me, David Jones, and Capital.com, I hope you have a good trading week.